Higher for longer rate debate to dominate Jackson Hole meeting. This is exactly what we were talking about. And, are we going to be in an era of just relatively higher inflation?
Yep.
It's going to require higher rates. And the concept that, if we're at 3% inflation right now, 3% CPI,
Mm-hmm.
getting that last percent from 3% to 2% is going to be a chore.
Yeah, that's a big thing. Oh yeah, totally.
And they're going to have to wait. But then on the other side, it's like, well, maybe it's not going to be as long because now all of these rate hikes are finally, seeping into the system.
Mm-hmm.
And so, do we really need any more rate increases, or can we just plateau here for a while and let it work its way through the system? We know we've got a lot of loan maturities coming due. This isn't helping that situation. Let's get through that.
Yep.
Now, although they could also acknowledge that by lowering rates, they would help all of those borrowers that could be in potential distress. But I don't believe helping out CRE borrowers, Matt, is exactly in the Fed's mandate.
Yeah. Well, they had that guidance that was, kind of a token.
That's true. That's true. Yeah. Some guidance to banks of like, hey, here's some, if you're going to work out some loans, you're probably going to have to work out some loans.
Yeah.
Here's some things that we would recommend that you look at and the way you do it.
Yeah, that's a small
examples.
potatoes. Yeah, that's a small potatoes compared to the material effects of higher rates.
But Matt, I could make an argument either way.
Mm-hmm.
On inflation for higher and rates higher for longer. But what does it brings us back to this debate we've been having for years of transient. I mean, we thought in 21 we're like, this inflation's transient. But what is the definition of transient?
And
I mean it's short, very instant in time, and we're obviously beyond that. Yeah. But how long is it? Another years?
Yeah, that's what I wrote too. They say higher for longer. You can Google that, and you'll get a lot of articles about this week.
What is higher and what is longer?
Well,
does higher mean like longer? Here?
I am going to say, at least the way I understand it, for me, longer's not that long. 2 years. And this is just, a reasonable hot take is, what if we do hang around high? Maybe they cut it to 4 at some point, but we don't see appreciably lower rates until 2025. And, but
even that I think would be a big relief if it went from 5.5 to 4.
Yeah. Yeah.
I think that would be I think that would be major news and of rate reduction, but it's like, is higher mean it's like, are we in higher, or does that mean that it's going to go from 5.5 to 6 or above the Fed funds rate, 6 and longer? I mean, I acknowledge longer is probably more than 6 months.
Mm-hmm.
Is it a year? Is it 2 years? Is it a decade? There's undefined terms, higher for longer, but it's not lower sooner.
Yeah, I don't think it's lower just for the great on the out of the goodness of their heart. It's the alternative is like recession caused by higher interest rates. Not necessarily. We're out of stagflation territory. But I think now the alternatives, and we've mentioned these more than a few times, is this idea that the Fed's going to create the kind of a recession, and maybe we're already headed there because labor is cooling a little bit, consumer spending is cooling just slightly, and savings is and credit. So we're showing a little bit more fragility than we used to have, but still roaring back. And there's no, another potential scenario is, what if they lower it by half a point? They see a crazy reaction like, all right, we're not going to try that again.
Yeah.
And but I do think that underlying this idea for higher for longer is a fundamental faith in the economy. There were many forecasts for recession in 2023. You talked about this. The 2 year, 10 year, the greater uncertainty in the near term and greater certainty in the long term. With that, that's perfectly been the case for the past 2 years. Period. Yeah. There was a little bit more confidence maybe in 2021 when things were roaring along, but it's very uncertain for the past year where things are going. Yeah. And I think that this idea that interest rates could be either elevated or really reset, like being able to plot that course, just the predictability is I think it's one of the tops the list of pivotal concerns for the community, for the commercial real estate industry, capital markets specifically. Collier's we'll go over and talks about the low multifamily volumes. We are about about near half of what we usually have, and two quarters of of about half the volume as usual. Even though multifamily has been traded the most, it's the one that's gone down the most in terms of transaction volumes.